Samsung, this is Ria from Samaya MCQ 76 CA Finance. X Limited is a public limited company which is also listed in National Stock Exchange, and CA Buddha is asking about the corporate governance compliance as per Regulation 27 and Schedule 2 of LODR. How the company should comply with such provisions. It should submit a quarterly compliance report. It should submit quarterly compliance report on corporate governance compliance within 21 days. To the time within 21 days, and the report shall be signed either by compliance officer or CEO. This option A is most appropriate. We'll see other options also. It should be the time was the same, and it's monthly compliance, not monthly, it's a quarterly compliance. Option B is not appropriate. It should submit quarterly and within 30 days. No, within 21 days. And if you submit annual compliance, no, quarterly compliance. It's a quarterly compliance within 21 days and signed by a compliance officer or a CEO. Option A is most appropriate answer. This outcome is Surya from Samaya in CQ 77 CA Final. A report submitted by you after an audit of public sector unit is more likely to be finally reviewed by. Okay, you have done audit of PSU, and who reviews your audit report? It's a public accounts committee or committee on public undertaking or estimates committee or public sector committee. It is committee on public undertakings reviews your report on public sector unit. Option B is most appropriate answer. Committee on public undertakings. Confirm, this is Ria from Samayo, MCQ 78 CA Final. You have been given an assignment of audit of IT department of a PSU. Okay. A checklist was handed over to you which contained questions such as: are separate usernames and passwords assigned to individual users? Are periodical changes of passwords ensured? Are external data backups maintained at a place outside the premises? Most of these questions were like, they have a company had a set of rules and regulations, whether in operations they're complying to that rules or regulations or that internal controls or not. So it's mostly, we'll see what type of audit is this. It is not a comprehensive audit because it had only about compliancing of certain rules and regulations. It's not a proprietary audit. See, compliance audit is most appropriate audit. It's not a financial audit because it didn't exist anything that's related to financials. Option C is most appropriate answer. Hey Samsung, this is Ria from Samaya MCQ 79 CA Final. Mr. P, he's the statutory auditor of PQR Limited. Now the PQR Limited wants to avail services of internal audit and bookkeeping services from Mr. P. Can he do so? Can a person be statutory auditor as well as he could provide internal audit and bookkeeping services? The answer is a straight no. We'll see the options now. They're asking us to choose an appropriate option from the alternatives. Mr. P can provide, no, he cannot provide. Mr. P can provide, no. Mr. P can provide additional services, no. He cannot provide additional services. D is the correct answer. Hey Samsung, this is Ria from Samaya MCQ 80 CA Final. Gamma Limited is a LLP which was appointed as statutory auditor for the Beta Limited. Alpha Limited were chartered accountants, those were the retiring auditors. That is, Alpha Limited were previous auditors. Now they are asking us to suggest whether Gamma Limited, that is newly appointed chartered accountant, have to do any audit procedures with the retiring auditor. Yes, they have to obtain a no objection certificate. They have to communicate with the retiring auditors and obtain no objection certificate. We'll see the options. Option A, to obtain no objection certificate from Alpha Limited before the start of the audit. Yes, before the start of the audit. So option A is more appropriate answer. Hey Samsung, this is Ria from Samaya MCQ 81 CA Final. We associates were appointed as statutory auditors for the G Limited. In G Limited, they had a fraud occurred for 2 CR. That is more than 1 CR. If the fraud is amounting to more than 1 CR, to whom the auditors have to report? They have to report to the central government. And you're required to suggest whether statutory auditors is required to report fraud to audit committee board of directors. No, they have to communicate with the board of directors, management, and TCWG or audit committee if it is applicable to the company. After that, you have to submit those committees' responses or board's responses to the central government. So To report to shareholders, no. To report fraud only in auditors report, no. To report fraud to central government, yes. Option D is more appropriate. In Samsung, this is Jia from Samaya in Security to CA Finance. All limited issue prospectus for IPO, which the issue was fully subscribed, but they have later found that there was an abnormal rise in sales. That is, they have manipulated the sales. On discovery of the company, refunded all monies to subscribers, and they have prosecuted the auditors. And the auditor have said that they have followed the selected verification and they have not found any kind of suspicion, and all the internal controls were satisfactory. You see, this is the auditor's notion was right, because the audit of financial statement was done not with the pre-notion that some fraud already had happened. Investigation does that. So we'll see move forward. And company was not able to prove that auditors were negligent in the performance of their duties. These are the three opinions. The company is putting claims on auditors for their negligent work, but the auditor had done satisfactory work that as they have checked the internal controls and found they were satisfactory and followed some selected verification, there's no wrong with the auditor. So we'll see that option here. The stand of company was correct. No. The approach of auditors looked reasonable. Yes, the auditor found internal controls to be satisfactory and did not find any circumstance that aroused suspicion. Obviously, they have to be professional skepticism, but not a pre-notion that a fraud had already happened, and hence they performed their procedures on based on selected verification. Option B is the most appropriate answer. Hey, Samsung, this is Ria from Samaya, MCQ 83, CA Final. He subscribed to the shares of J Limited, and they have found that some information included in prospectus was misleading, and that prospectus included auditor's report. And the auditors of the company were asked to make good for the losses, but they refused. But what's they're asking about? Please suggest which of the following is right. You see, even the auditors were liable if they give an auditor's report in the prospectus. But if at all, if they don't want to get liable, what do they have to do? They have to withdraw their audit report before issue of the prospectus, or they have to make a public information if the prospectus were issued already that they did not have some information, so don't rely on the auditor's report. The auditor here had done nothing, so auditor is liable to pay losses for the case. So the argument of auditors is valid. No, the argument of auditors is not valid. Option C is correct. And we'll see option D. The outcome of litigation seems to be completely wrong. No, the litigation was right. So option C, that the argument of the auditors is not valid, is right answer. Hey Samsung, this is Ria from Samaya in CQ84 CA Final. J Limited engaged in software development and its stakeholders found some deficiencies in the financial statements, and they have filed a case against the company and also its statutory auditors. And what was decided is that the loss was occasioned through negligence of directors and fault of direct auditor in failing to verify the asset as considered to be only technical. The auditor had, they're saying that the auditor had not verified the asset. Being a software development company, the auditor could have approached some audit experts, but they haven't done that. So, since there is no amount that was involved in the fraud, they haven't mentioned anything. We can't decide the 10 lakhs or the 10 CR. We have to escape that. We have to change that. This is actually the 10 lakhs and 10 CR is mostly the fraud amount. So, as I have not given, we'll eliminate these two, A, B, and C. And with regards to D, since the fraud is limited to technical nature, you would not be allowed to work for this company for the next 5 years as per requirement. With regards to any kind of imprisonment or any fraud like this, there have to be some imprisonment, not a cooling period. So when it's false, but a penalty should be levied on auditors, but it should not be equivalent to the damage suffered by the stakeholders if it had gone some bluntly. So we'll choose mostly the same might be the appropriate answer. Hey Samsung, this is Ria from Samaya, MCQ85 CA Final. K Limited is a mid-sized e-commerce company and it wants to expand its operation, so it went to IPO and issued a prospectus. And the stakeholders had taken a legal action against the company that they found something misstatement. The prospectus was misstated, and the directors are saying that they would not require to face such action if the financial statements were properly audited, duly audited by the chartered accountants. You see, preparation of financial statements, the responsibility lies with the management. So management contention here is wrong. Now we'll see what's the corrective action here. The understanding of directives is correct. No, that's wrong. Understanding of directives is wrong. Yes, and not, and they are liable for 447 Section Companies Act and not auditors because responsibility of prospectus lies with management. No, prospectus includes audit report. So auditors also responsible. So B is not fully correct. We'll see C. They may lead to criminal liability under Section 447 Yes. Every person who authorizes such issue of prospectus, yes, it's a criminal liability, not B, it's not civil liability, so option C is right. Very final. B is a chartered accountant who has specialized in income tax and various other accounting services also. He had gotten a very old client, and what the old client had said, he said to prepare the books of accounts for him and also conduct examination of those records. You see, the same person, B, is preparing the books of accounts and he's only examining those records. That's a kind of, he's guilty of fraud. And then client said that women will be getting a very good remuneration if he provides some benefits to SSE. That is, willfully, they were evading the tax. So under section 278, under the chapter liabilities of auditors, liabilities under Income Tax Act, and under section 278, he should be, the chartered accountant would be liable for imprisonment from 6 months to 7 years plus fine. And we'll see what are the penalties here. Women only acted as representative, he cannot be held liable, no, he is guilty. And given matter does not relate to submission of return of income and examination of records, no, they have evaded the tax also. So women will be liable for rigorous imprisonment, which may be extended to 7 years plus 5 years. Option C is right, and which may be women is would be liable to pay penalty, which would be extended to 1 year. That's under 447. But when he's acting as an authorized representative under ITI, you have to check for section 278. So option C is more appropriate. This is Ria from Samaya, MCQ 87 CA Final. The Board of Director of Y Limited appointed a cost accountant who is not in practice to do an internal audit function. But the other officers of the company are against the appointment of such cost auditor. State whether the officers are correct or wrong. You see, being an internal audit officer, he could be whether a chartered accountant or a cost accountant, or he could be whether in practice or not, or any other kind of employees, whether any kind of experts. They could be employees of the company or some external parties. There's no restriction that only practice one or only chartered accountants have to be there. Will say chartered accountants only in practice? No. Cost accountant in practice? There's no restriction on being in practice or not. You have to be an employee? No. The viewpoint of the auditors is not correct, yes, and the internal auditor can be a chartered accountant, cost accountant, whether in practice or not, or such other professional, yes. Even other professions were also included, as may be decided by the board. Option D is appropriate. This is Riya from Samaya, MCQ 80, CA Final. Employees of G Limited have to travel frequently, so the company entered into a contract with S Travels Limited. As per contract terms, S has to raise monthly bills. In 1 month, they have raised a huge amount. So the management want to audit such process followed by such S Travels Limited. What kind of audit they have to opt for? You see, S Travels was something that was external entity, right? So they cannot opt for internal audit. They cannot opt for the management audit, because management audit is something that whether the management is getting all the information or not. They have got some information. It is not about the completeness of information. Performance audit. Performance audit to assess the performance of Simony Travels. No, it is mostly done performance audit when you wanted to acquire a new entity. There's nothing for that. Operational audit is audit of management, involves verifying the effectiveness, efficiency, and economy of operations done by S Travels for the organization. I think we want audit only for the operations that they were doing. So option D is most appropriate answer. This happened the Surya from Samaya in CQ89 and CA Final. D Limited appointed K as its statutory auditors. They found that the internal audit function was reliable and effective. And but they found some risk of material misstatement with regards to inventory levels in few branches that they have appointed internal auditor. They have taken help of the internal auditor, Mr. R. You see, using the work of auditor is permissible, but not when the misstatement was material. Not when the misstatement was material. This is something we have in red flag here. And since ours has recently done such assessment, why they have given is that because the internal auditor Mr. R had recently done that. And the statutory auditors also requested Mr. R to help in paperwork, including audit documentation. This is also again a red flag. The audit documentation should be done only by the engagement team, not by the internal auditor there. So we'll see which of the statements would hold true. The working of internal audit was reliable and satisfactory. No, we should not use the internal audit function there. The documentation would be considered complete as far as statutory auditors know. Even the documentation's portion also should not be considered complete. Since the internal auditor conducts similar inventory, because of familiarity, it would be delegating would be read no. That shouldn't be the case. The statutory auditors should not have delegated the inventory level checking as well as was material. Yes, this is the point we are talking about. Further, the audit documents are property and responsibility of the statutory auditors. Yes, that has to be done by the engagement team and the engagement partner, but not by internal auditors there. So they have to put some confidentiality. So option D is most appropriate answer. Hey Samfam, this is Ria from Samaya, MCQ 90 CA Final. INC, which is the acquired company, wants to acquire target company H Private Limited, and it had talked with the initial price. He's in talks and had got done a review, and it found that there were huge labor claims and show cause notices that have given, and they inquired what he has to do with regards to the initial pricing system, whether they have to include that or not, whether they have to communicate or not. The appropriate answer is, even though the initial price between was already set, the initial price was already set, they look at there were few hidden liabilities like show cause notices and labor claims. What they have to do is that the firm have to report these matters to the acquirer to have that liability side also taken into consideration. So option D is the most appropriate answer. Hey Sam, from this is Ria from Samaya, MCQ 91. CA finding. A Associates was engaged in consultancy business, and it wants to expand its business and had conducted investigation for the new partners. Further, the investigating accountant had investigated for profits of past 7 to 8 years and also asked about details of jobs and other procedures and current clientele. But the senior partners had advised not to go beyond the scope. You have to advise whether the above procedures were within scope or not, appropriate or not, is obviously the procedures of investigating accountant looks completely reasonable and were not with no changes are required in the work approach. So option C is the most appropriate answer. Hey Samfam, this is Ria from Samaya, MCQ 92 CA final. A Limited is the acquired company, wants to acquire target company FC Leather Private Limited. So it had asked for a due diligence review by S&S Associates. What the due diligence reviewer had done is they asked the financial projections of the company for the next 5 years, but the target company refused to provide the same as they are not part of due diligence review. Such objection, whether we have they asked us whether such objection was right or wrong. It is not right, it's not correct. Financial projections are a part of such due diligence or prospective business when some acquired company wants to invest into that target company. So option B is the most appropriate answer. Hey Samfam, this is Ria from Samaya, MCQ 93 CA final. CA had taken loan from a bank and issued 2 checks for repayment of loan, and those were returned back by the bank with remarks of insufficient funds. CA is liable for misconduct under which clause? Clause 6, Part 1, first schedule. It is when solicits clients or work through any circular advertisement or any kind of personal communication interview, etc. So that's not the case here. Clause 4, Part 1, second schedule is expressing an opinion on the firm which he is substantially interested in. So it's not also clause 4. Clause 12, Part 1, first schedule, when allows a person to sign on his behalf who is not a chartered accountant or a partner in his firm. So it's also not here. So clause 2, Part 4, first schedule is bringing disrepute to the profession. This case is more suitable to option D. So option D is most appropriate answer. Hey Samsung, this is Ria from Samaya, MCQ 94 CA final. A CA who is working a part-time tutorship under coaching organization was awarded Best Faculty of the Year. He later on posted that on his website, under which clause he is liable for misconduct. See, this is a tricky question. It appears to be like an advertisement, but no, because advertisement is allowable in his own website. But we'll see what all the clauses he's liable under for misconduct. Clause 6, Part 1, first schedule, which talks about soliciting clients for work by any circular advertisement or any kind of communication, personal communication or interview. This is what the right option is. We'll discuss why the others were wrong. Clause 9, Part 1, second schedule deals about fails to invite attention of material dispatcher of generally acceptable audit procedures. So he's not doing any audit there, so doesn't fall here. Clause 7, Part 1, first schedule of Chartered Accountants Act, that is advertising his professional achievements. You see the touch is here. In advertisements, he could advertise in his website, but advertising here is on his website. So he's not liable under clause C, clause 7 here, option C. Option A, soliciting work through any kind of even personal communication or through interview. So option A is the most appropriate answer. Clause 8 is not obtaining sufficient and appropriate audit evidence. So option A is the most appropriate answer. Clause 6, Part 1, for schedule when he posts his professional achievements on his website. Hey Samfam, this is Ria from Samaya, MCQ 95 CA final. Mr. Hope, an aspiring student of ICA, that is, he was an article assistant under Mr. Witty. Mr. Witty had said that he could not able to pay his stipend of rupees 2,000 per month, so he will pay that after 6 months with a 10% per annum compounded monthly interest rate. Is this right? Whether Mr. Witty would be liable for misconduct or not? They're asking that. Is he liable for misconduct? Option C is not right. And moreover, he contravened the provisions of or guidelines or regulations given by the council to pay monthly stipend to the article assistant. So clause 1 part 2 second schedule talks about that, contravening the act and regulations which were passed by the council. So option A is the most appropriate answer. Option B, clause 4 part 1 second schedule is expressing opinion on financial statement on a firm which he has substantial interest in. So that's not option B. Option D, clause 10 part 1 and second schedule were keeping the money of other than fee or remuneration which has to be given in a separate account. They have not given the remuneration itself, so that he is paying the stipend after 6 months. So not option D. Option A is the most appropriate answer. Hey Samfam, this is Ria from Samaya in CQ 96 CA final. Jairam is practicing in the field of financial management planning over 12 years. He gained some experience and he wanted to teach that. And under Rule Regulation 190A, for granting general permission under private tutorship or part time tutorship, what are the direct teaching hours devoted to such activities should together taken were should not exceed 25 hours a week, should not exceed 21 hours, should not exceed 25 hours a month, and should not exceed 21 hours a month. How many direct teaching hours he could do? He could do up to 25 hours a week. So option A, not exceed 25 hours a week, is the most appropriate and right answer. Hey Samfam, this is Ria from Samaya, MCQ 97 CA final. R Limited has got internal auditors for its company, where internal auditors had been given two observations here: weekly offs not provided and working hours exceeded the maximum limit as per 12 hours a day. With regards to the rules and regulations, it has to follow as per legal requirements. Now management has explained that they have been practicing since years, so they will review the working schedule of the workers frequently. Now what the auditor has to report: the auditor has to report all the observations they found and the management comments or the response to that. So option C, internal auditor observation should be reported in his report along with management comments. So option C is most appropriate answer. Hey Samfam, this is Ria from Samaya, MCQ 98 CA final. S Limited has seen a significant increase from 4% to 10% in its sales returns. So it want to put on operational audit, and while even though there was an internal audit was being done for the departments of sales and production department. What are the reasons that the management is opting for operational audit? We have to find out. First was because the management is not satisfied with the performance of internal audit department. No, it want to know the reason for why there is a significant increase in percentage of sales written. So not one, as operational audit will be done by an independent person and will provide suggestions for improvement. Yes, because a management is audit is qualitative in nature and will analyze all aspects of operations as per management policies, objectives, and goals. Yes, obviously, because internal audit is restricted to the financial accounting and internal controls only, so they are opting for operational audit. So option 2, 3, and 4, which comes under option C, were right. Option C is most appropriate answer. Yes, Samvam, this is Ria from Samaya, MCQ 99 CA final. In accordance with Companies Act 2013, with respect to investigation into affairs of the company, who can be appointed as an inspector? Inspector, not an auditor. Auditor can be a firm or an individual, but an inspector is an official. He is an individual. He should be an individual, so he cannot appoint a firm. CA Mehul is an individual. We could appoint him as an inspector. A body corporate cannot be appointed. So option D, only two, that is CA Mehul, could be appointed as an inspector. Option D is the most appropriate answer. Hey Samfam, this is Ria from Samaya, MCQ 100, CA final. The insurance company is into reinsurance where the contract relates to one particular risk and it is expressed in the reinsurance policy, and each transaction is negotiated individually. What kind of insurance it is? Facultative reinsurance. Option A is the most appropriate answer.